I'm excited to announce that the portfolio did not hit an all-time high in April.
I said, hold up, wait a minute, something ain't right.
Oh, it's right. We're finally able to swoop up some shares at a slight discount, and we're continuing to dollar cost average in, and we are not panic selling as the market goes through its moods. Right? Stop hovering over that sell button. You want to hit the buy button instead. It's the one that's right next to it. In this video, we'll discuss the wild ride that we took in April and why it's nothing more than a little noise for us long-term investors. We'll look at the portfolio's value by holding, all new transactions from April, the dividends received, the HODL Factory update, these are my individual stocks, and the members are going to get a treat in this one, and any future strategy adjustments that I might be thinking about. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please aggressively tap that like button, subscribe if you haven't already, and drop me a comment down below with anything that comes to mind as you watch this video. We have 13 new channel members for the Sunday shoutouts. A huge thank you to all the names on the screen that you see right here, and for anyone that's been around for a bit as well. I've recently dumped a lot of new spreadsheets out there. I hope you're enjoying them, along with video tutorials to show how to use each one. Let me know if you have any questions. I alluded to it earlier, but after this video, I'm going to have a spreadsheet out there with the full holdings of the HODL Factory, and it will also show some high-level stats about the HODL Factory itself. I really do appreciate the support, you guys. I would much rather do it this way and try to provide value with you with these spreadsheets and other things, emotes, and just supporting the channel in general, instead of having to sell out and do a bunch of sponsorships that I don't believe in. And to answer a pretty common question I get, if you do want to join the membership, the link is in the description below. Let's grow. April Insights. So in this first section, before diving into the portfolio, I'll just dump my high-level thoughts that I think are important for the current market situation. I'll quickly say, as the market continues to crash and then go up a little and then crash, keep on buying. I know I stress it all the time. I don't want to get annoying with this, but when you panic sell as things are falling, or when you buy at the top when everyone's jumping in, you're just costing yourself wealth long-term. Do the opposite of what your gut tells you. The other thing that comes to mind this month is I wanted to highlight the advantage of market-weighted ETFs. I've had a lot of back and forth dialogue in the comments about this in many of my past videos. Many of you thought that VGT was a crazy idea. There's no way you should buy and hold it at the time because it was 43% Apple and Microsoft. They mentioned that while it was great in the past, it will completely implode if either one of those companies takes a dive in the future. The truth is that VGT would be just fine if either one of those, or perhaps even both of those two companies, were to tumble. Now, it would implode if the technology sector were to collapse. I always say this, holding 43% of Apple and Microsoft as individual stocks is crazy, and it is significantly different than holding 100% VGT. In fact, looking at my portfolio as a whole, I personally will not hold an individual stock that makes up over 5% of my overall portfolio. But I'm cool with VGT because it is market cap weighted within the technology sector, and I'm a major tech bull. The way it works, as technology stocks rise, like Broadcom and Nvidia lately, for example, they automatically become a bigger piece of the pie. It is self-updating just like the S&P 500. ETFs that are market cap weighted will update the holding percentages as the market changes. I think looking at the data will help me explain this. Let's check it out. I've pulled up VGT out in Seeking Alpha. So I went to the charting tab. First, let's discuss why VGT has been so powerful. People say it's been 40+% of Microsoft and Apple, and that's the only reason it's outperformed these other ETFs. In the last 10 years of total return, VGT has obliterated QQQ, which I think is the best multi-sector growth ETF, SCHD, and IWY. I just pulled up some of the popular ones that are not all tech like VGT. Here you have FTech and XLK, Y and IYW. But the point here is that tech, these tech-based ones like VGT, have been carried primarily by Microsoft and Apple. So 40% of VGT being these two companies over the last 10 years have clearly boosted its return. This is where I understand the people's perspective. Now, about 1 year ago, so VGT in the last year is up 34%. It's still competitive with these. It's lagged a little bit, as you can see, in the last year. And as you can see, Apple's been a major reason why. Microsoft stayed about even. If you held just Apple stock, you've lost a ton by comparison to the market. But you're like, VGT's just fine, all things considered. You know, year to date even, it's having a rough one, but it's, you know, nothing too crazy behind. It's close to the market. The market is a little ahead of it. But now I'm going to show you the secret here. If we go to the holdings tab, a year ago, Apple was 22% of VGT because Apple was 22% of the tech sector that these 316 holdings represent. It's like a big chunk of tech. Apple, by comparison, has weighted down to 15%. It was 22. Microsoft, I think, was around 21. It's 18 because it stayed flat. And you're thinking, well, why did it drop if it's performed on par with VGT? That's because companies like NVIDIA and Broadcom are at almost 12% and 4%. They were way down here with these guys, but as they grow, they have made up a larger portion of the entire technology sector. So much like the S&P 500, this takes care of itself. If these ones continue to crash and some of these other names continue to rise and overall tech is about the same, as the companies change, it automatically evolves. You've shaved off 10% of these two holdings. Now, if you held them individually, yes, it would go down, but you don't also get the proportional come up of these ones. Like Microsoft has gone down, whereas in your portfolio, Microsoft might be the same or even a little more. You shouldn't be concerned in being heavy in just two companies compared to holding these two companies outright. All right, let's get into this thing. Portfolio overview. Let's get into these accounts now. And then as per usual, we're going to jump into my portfolio tracking spreadsheet to see how I assess my overall target allocations within my portfolio. Oh, and great news. This time I actually did my job. I have a copy of the portfolio tracker out there for the channel members. I put video tutorials of how to use the tool out there in the OneDrive folder as well. We're gonna start out here on Seeking Alpha. So this is what I use, and you can see there's my account value. It'll be slightly different than the spreadsheet because I'm recording this on Tuesday after market close, and the spreadsheet's updated every Friday, but the shares will be the same. But I really do highly recommend using Seeking Alpha as your aggregator because when you want to research something, you know, if I click there, here's my holdings in E-Trade, and we'll get into this, but if I click VGT, boom, here's those things I'm always showing you guys. You know, you have the chart, you have the dividend information, the dividend scorecard. This is all of your information, but you have your holdings, breakdowns, all these things I'm always going through. It's just right here in a snapshot attached directly to your portfolio. I don't even log into E-Trade anymore unless I'm making a transaction. Speaking of E-Trade, I'm going to stay here. If you guys have seen my videos, you know that my accounts are legit, but I don't want to go through the time every time of walking through it. So just as a quick catch up, out in E-Trade, I have a balance of $868,000. This is my wife and my taxable account is about half of this, and a huge chunk of SCHD and all the JEPQ is there. And then I also have my rolled over 401ks, so they're now a traditional IRA from the three companies that I worked at. So it's all in one rollover IRA, and it has all the VGT and a little chunk of a money market and a little chunk of SCHD. So just know that these are all out there within two accounts. And I do have a little Roth that I think has a slice of VGT and mostly SCHD, and it's only about 15 grand. So that makes up all this. I just saved us from navigating to E-Trade. And as you can see here, VGT is currently selling at $5.15 per share, and I have 650 shares still, and my average cost is $287. Truthfully, it's lower than that, but I've moved a lot of stuff around. You can freely move investments around within a traditional IRA without triggering any taxable events. I've actually done better than that in reality. And for SCHD, I have 4,220 shares, mostly in a taxable account, a chunk in the tax protected accounts as well. Average cost is $72.51. Again, same concept of this. It's in reality, if I wanted to look good on paper, it's a lot cheaper. And then of course I have my money market, which is my cash, and we'll dive into this later. I like to hopefully keep it around 10% of the overall portfolio. And then JEPQ is my cash flow, and it's in the taxable account, which I know adds ordinary income, but it's at about 87,000. I still have those 1632 shares at an average cost of 48.23. Not bad, it's at 53.26. I do have a slight update. I am thinking about deploying a big chunk of cash, the money market, instead of selling JEPQ when JEPQ is a year old for those long-term capital gains I've been talking about, to keep these at 10% for my overall, and I'm saying this in quotes, cash. I understand JEPQ will fluctuate a lot, but I like the juicier yield, and I need the cash flow more than I need the cash now. So I'm going to deploy, I think, some of this into my holdings, including QQQM, my new holding that I'll get soon, instead of just selling out JEPQ, but I'm not 100% sold on that, so more to come. JEPQ becomes 1 year old in August, so that's when I'll officially have to make a decision. And then with the 401k and HSA, this is my wife's. We have a S&P 500. It's actually a closed-ended fund, but I use this ticker and I can track it dollar for dollar, basically. Boeing uses a different one and I can't quite find the ticker of it. And right now we have 1,960 shares of FXAIX, and it's worth $352,000. It's running away from the other two that I like to keep each of these at a third. And that's just because we are maxing the 401k and we're getting by on bills with a combination of her paycheck and some of this stuff up here. Inevitably, the S&P 500 is going to run away for a while, and I'm okay with that. If anything got overweight, I would want it to be the market personally. And then VIGIX, which is the equivalent of the ETF VUG, is her HSA. It's the best available option, the HSA. There is no S&P 500 and there's none of my favorite growth tickers. So, and VUG is solid, but we have $27,000 of that. And again, these get money every other week. I update them on Seeking Alpha. I'm not going to show those transactions. Just know that these will continue to grow over time. Okay, crypto. This is a big one, you guys. I'm still doing that IBIT project that I talked about in January. Made a video about my strategy. So I've slowly accumulated 193 shares of IBIT. I buy weekly, and we'll get into the details of the transactions here in the next section. And right now I'm up 4%. So it started out, I was looking like a genius. I was buying at, upper 20s, low 30s, I believe. And it got up to the 40s. But Bitcoin's kind of taking a little bit of a dive. It's back up to 63, but it was at 73K. So I am accumulating this IBIT. I'm still a part of the Doge army. Duh. I have that. It's worth 467 now. What are we at? We're at 15 cents a coin, and our average cost is 39 cents. No, I didn't fall for the crazy happenings in 2021. And Bitcoin, I have, and these are both on my crypto broker. Bitcoin, I hold 0.78. And you can see right now, I am up about 13.2K. So that's my crypto. It's eventually just gonna be all IBIT within E-Trade. No more holding it. No thank you, even to cold storage. And then M1 Finance, we're gonna jump out to there specifically. So I won't even bother with this one. And then checking and others, just boring, cash from our business account and our personal checking and paying bills and that kind of stuff. So this is what it is. It is a little low right now. Might need to move some things around a little bit. All right, I'm out here on the HODL Factory, you guys. This is the most exciting thing I do personally investing. And I must confess, I just screwed up my record. So I'm doing this all again and I'm a bit annoyed right now. But you know what? Let's just do this thing and let's stay positive. So I have $9,200 out in my individual stocks, and I'm excited to say I've been able to dollar cost average in $300 to $350 a week the last many weeks with my YouTube money. So I'm taking every penny I make in YouTube and I'm putting it into here. You guys are making this one possible. And what I've done here, let me go back to year to date. If we scroll down this time properly, the HODL Factory is up 11.01%, and the market. This is all VU. So this is all of my best friend and my stocks sliced in here. The weighted average is 11%. The market is up 8.66% as of this recording. That's what VU's done this year. And if we go out, let's see, we can now go out a year because we have just over a year, I believe, of history. Yes, so 43% in the last year is what the HODL Factory is up, and 27.6 for the market during that time. And then all should be very similar here. It is 44 because we've done it just over a year. So all is almost the same. It's at 44 since inception. And since inception, the market's up 29%. So we've done incredibly well. And I am very excited to announce for the members, and it's as of this week, I got to get on this because I'm recording this Tuesday and I'm going to do this homework Wednesday. I'm going to have a Google Sheet and an Excel spreadsheet out there that details all of our holdings in the HODL Factory by ticker and exactly how much we have. And then it'll also show some cool high-level stats that I'm able to put together with the power of Seeking Alpha. These are my individual picks, and you shouldn't just blindly follow them. We are still working on our methodology. This is still a work in process, and I highly recommend continuing the journey with me, but maybe just use me as a guinea pig for now. It's time to bring it all together. So I'm out on my portfolio tracker, and I put this spreadsheet and Google Sheet out there for the members, along with a tutorial video. I updated all, and this is as of Friday prices, so you can see it's a little lower. The market went up Monday, but that's okay. This is a little outdated now. Every Friday, I update my holdings here, and I have reasons for doing dollar amounts instead of shares, and I explain all that to the members. But as you can see, I just went in, I put in, I call it VU. It's basically that closed-end S&P 500 fund that Boeing has. And then VGT, SCHD is across all accounts. Cash is the money market knee trade in this case. Cash flow, JEPQ, and that's the 86,000 at the time. Crypto includes that little slice of Doge, but is basically all Bitcoin. And someday it's going to be all IBIT. So I just progressively put that there for now and just put one number there. There's that VUG basically. Here's the HODL Factory at the time, and then cash across different checking accounts and stuff for the business account and all that. Ooh, we are getting low. So it came to a total of 1.308 million. And after these inputs, this updates automatically. So here's how we see how our weightings are. Right now we're in 26% VU, 25% VGT, and 25% SCHD. I feel pretty good about that mix. Again, VU is gonna run away because we're currently maxing a 401k and I just don't have money to dollar cost average into these for now. And that's okay. So these will not stay at a perfect third, but the overall goal long-term, when I have more control, is to keep them roughly the same. Now remember, I'll be adding QQQM to the VGT. When growth here, this combines VUG, VGT, and eventually QQQM when I have it. I'll compare growth to this dividend one to know when to buy what one. And maybe I'll have to make my growth destination a little bit higher because it does include these default dollars of the HSA. So, I might end up going, 40, 30, 30 or something to that extent, or 35, 35, 35, 30. But the point is, when I need to buy growth, when growth is underweight compared to dividend, whatever my targets are, then I'll buy QQQM. When dividend is underweight, I'll buy SCHD. That's how I auto dip buy. I've explained that one in multiple times. Stay to your target allocations and you'll automatically buy the comparative dip over time. Cash a little light at 9.6, but again, I'm planning on considering JEPQ basically greedy cash. So I might have these equal 10% after a while. More to come on that. I'm not 100% decided. And then IBIT is just all crypto. It's at 4. Eventually that'll be closer to 2 or 3. This is the HSA we can't control. And then my HODL Factory, I want this at 10. So these are ever evolving, but it's nice just to see where everything is. Like for example, I mentioned I'm putting my YouTube money into the HODL Factory because this is grossly underweight. I want this at 10%. Of all these, it's the most off right now. My wife maxes this, and the only thing we invest that's extra is the YouTube money, and that goes to the HODL Factory. So this just helps us keep our target allocations. And again, you'll have this for you out there. So my snapshots, as you can see, we have not hit an all-time high still since 3/29, and that's okay. So the all-time weekend high was at 1.35 million, and we dropped quite a bit down, but then we had a good week and basically an even week. Not too shabby, you guys. We'll get there again. Sometimes you produce a whole bunch of all-time highs, and sometimes you have long droughts like 2022 of going from I'm the king of the mountain to ouch, I'm falling, someone help, someone catch me, ouch, 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 and you finally hit a high over a year later. So doesn't matter where you're at, who cares? Dollar cost average in, be a buyer only, do not panic sell in these times because this is coming. This is an ad that only the Excel version has, unfortunately. It auto updates, but Google Sheets does not do pivot charts. It has pivot tables. So what this does is it just shows the average account value for each month. If I made 5 updates for a month, it takes the average. So like looking here at March, you guys can't see this off the screen, but the average is 1.330. So when you come out here to March, the average is 1.330. So it's just the average account value for each month. If you do 1 update a month, it'll just show 1 number. If you do 1 every week, you'll have 4 or 5 that merge into 1 number. So it keeps it clean. And look at this, you guys, with all these highs and lows and naysayers and politics and stuff we can't control. 2022 was rough. I kept buying. 2023 was kind of rough, getting better. I kept buying, and it got good towards the end, of course. So 2023 is a good year. I shouldn't say it was rough, but it was at first, and then boom. 2024, it could get rocky, and it might go back down to here and here and even here, but eventually we're gonna be here, and we're gonna be in 2025, 2026. These numbers are gonna have to have 2s in front of them and 3s. Stay the course. But yeah, you can see our average account value for the only update so far is that 1.308 million. Not too shabby. Let's see where all the new money went this month. Portfolio contributions. My wife and I still don't have a lot of extra money to invest each month since one of us decided to just quit our job.
Wait for it. Here it comes. Almost there.
It was me. We do still max out her 401k and her HSA at work. And we're also able to pay our life bills with her paycheck and some of the cash flow from our money market and JEPQ. And I mentioned this last month, but I also have been able to start investing my YouTube money into the HODL Factory on M1 Finance. Right now, that's about $1,500 a month, and that's everything that I make, but hey, it's a start and I'm really excited about it. Let's check it out. We're just going to use the pivot table this time for transactions. I went through every line item last time, and that was probably a little overkill. So I sliced out, you can see this has a slicer, and I'm looking just at April. This is the 2nd month I've done this. IBIT, I bought on a weekly basis. I bought 65 shares total, and the total amount I put into it was $2,500, and the average cost per share was $37.78. Remember, these are not new dollars. This is $2,500 that went from my money market, money we already had, to IBIT, because eventually I'm going to backfill the money market and put more into IBIT from Bitcoin itself when I get out of the exchange. So for now, I'm just stealing this money from myself. The HODL Factory was new money. It was YouTube money. I made 5 purchases. They averaged $330. I did 300, 300, and then 350 times 3. So put a total of $1,650 into the HODL Factory. I like that, and these are new dollars. And then SCHD was a reinvested dividend that probably from SCHD, frankly. And I put it, I believe, into my Roth, maybe my traditional IRA, and it was 8 shares for $634, which, ooh, ouch, $79.26. Whoopsie. So you can see a total of $4,700 of purchases this month. Again, the only new money is $1,650. Dividends received. The dividends weren't quite as juicy as we saw in March, but they still weren't too shabby. All right, here's our dividend pivot table. And much like the transactions, I'm not going to bore you with every single dividend. I do have them all listed on a tab down here, and then it pivots them up to here. So in April of 2024 here in the pivot table, we had $2,318.92 of dividends compared to last year's $1,279. 51, almost doubled that bad boy. Now, if we do a drop down here on the pivot for details, last year I had received some interest from a CD, FXAIX. Oh, it barely improved itself, and we have a lot more shares, so that's not great. JEPQ, I did not have last year. I had a lot of T-bills. So this is kind of apples to oranges, I'm gonna admit. But JEPQ paid us a monstrous $697.32. You can see why I want to keep that, be a little greedy, and go a little lighter on the money market. Our M1 mix didn't exist last year. This year it gave us a whopping $5.96. Do not spend that all in one place. Savor every penny. We had a treasury last year. They gave us $250. Clearly that was like a small little interest payment. Instead of a T-bill, it was probably a note or something like that pays on intervals. And then VMFXX, I just started to get into last year at this time. It paid us this year $543.81. A decent month considering none of my big boy ETFs paid, except for I guess this one mutual fund did. Is my portfolio all bark and no bite? Let's find out. Portfolio performance. We'll compare my portfolio mix against the S&P 500 to see how we've performed versus the market. We'll also use VT as a comp to see how we compare to the Boglehead Dream ETF. And just a quick review, VT is a combination between VTI, the total US stock market, and VXUS, the total international market less the US. So it takes basically all the markets into one holding to buy it all. Let's go. All right, we're out here on Portfolio Visualizer, my favorite place on the internet to run portfolio backtests to see how they compare. So for these inputs here, I'm mimicking roughly my investing journey so far. And this actually works out well because SCHD, you can't go back any further than this. So we're looking at 2012 through 2024, year to date included. And then I put in numbers, 10,000 starting, 2,900 a month contributed. These aren't perfect, but it roughly gets us to my ending balance. So it'll show how they actually compare if I did one versus the other. We're rebalancing annually. We're reinvesting the dividends, and we're going to display income at the bottom. So here's the portfolio setups. I have my mix, and that's our trusty a third of each between VU, VGT, and SCHD. The competition is portfolio 2 and 3. We have VU at 100%, that's the market, and VT, that's that Boglehead Dream at 100% for portfolio 3. And that's the entire world fund, including US and international. So I already hit analyze. We can just probably do it again here. And as we scroll down to see our results, with that scenario up there, which again roughly mimics mine, you can see my mix is at 1.316 million, and that's about what we're at. If we ran with VU instead, we'd be at 1.147. So it costs us quite a bit of money over the last 12 years and change. And if we went with just VT, we'd be at a paltry 890. So that would have really cost us. You can see our best year was the highest with our mix, and our worst year was the best with our mix. And it has a higher risk adjusted return and almost perfect market correlation. You can see the portfolio growth, they all go up and down together. That's how it's always going to work. It's just how much up and how much down, what's that right mix? So this makes me feel good seeing the trends, it's nothing crazy there. Now looking at annual returns, I've done in many videos in the past that explain that in the last 10 years, the mix has outperformed the market and VT every single year within the last 10 years, as you can see here. However, if you look at the first 2 years, which I like to include when I'm not specifically doing a 5 or 10 year window, so I don't cherry pick data, you guys, I really don't, but my mix was outperformed by the two benchmarks, and then it just got the best of me and this year as well, although we did crush VT. But if you look up at 2024, so far, ouch. The mix is at 3.28. The market is at 5.64 and VT is at 3.96. This is through April. The mix has fallen short, and this was the same case last year until November, so we'll see what happens. For the annualized returns, over the last 3 years, the mix has done 8.3% compared to the market's 7.9 and VT's almost 4%. In the last 5 years on the annualized returns, the mix is up a crazy 15.1% to the market's incredible 13.1 and VT's 9.4. In the last 10 years, we have 14.61%, and in the full timeline, 15.65% for the mix. The market is at 12.3 and 14, so market's looking pretty good, but we are consistently beating it. And VT is up 8.3 and 10.02 on the full timeline. For the portfolio income, for you people looking for cash flow, you can see that the mix started a little low, but it has grown its dividends at a superior rate to the other two competitions. In 2024, you can't worry about too much yet. This is all just a timing thing. So this one really goes through 2023. You'd have $20,500 of dividends with the mix compared to $15.1 thousand per year with the market, and a slightly better, almost $17,000 with VT. Can't go wrong with any of these, you guys. Looking ahead, I made the decision to finally add QQQM to my portfolio, and this has been bouncing around in my head, you guys, for years. It will be added to the growth section of my portfolio alongside VGT with the new dollars that are added to growth. So this will take time. And I know QQQM can sort of be looked at as like a hybrid cornerstone versus a growth ETF. It has a high overlap, 40-something% with the market, but most of that overlap is growth because VOO is usually a healthy mix between value and growth over many, many decades. So in this case, I'm going to add QQQM to my growth section. SCHD will be untouched and VOO will be untouched. And I may shuffle things around a little bit, offload a touch of VGT to build a little position in QQQM, or I might get creative, and I'll be sure to share any moves I make in my monthly updates. I'm still planning on getting the HODL Factory up to 10% of my overall portfolio, and I still plan on adding 5% per year for each year that I outperform the market. I'm such a skeptical person that I even put myself on probation until I prove that this thing is worthy. And as I mentioned earlier, I'm still cost averaging into IBIT with $500 on a weekly basis coming directly from my money market. But there are some changes coming in either next month or the month after to officially start the conversion process to completely get away from my online crypto broker. Thanks for watching this one till the very end, you guys. My goal here is to help you reach your version of financial freedom. That is why this channel exists. Awkwardly sharing my own detailed journey isn't the most comfortable, but if it can help multiple people out there to see what I do and why, it's worth it to me. Check out one of these two videos if you want to keep this thing rolling. And if you've made it this far watching me, you're a warrior and you definitely are going to keep this thing rolling. Thank you for watching, and I will see you here next Sunday. 2.